good morning and welcome. It's that time once again. Everybody on your feet. It's the Patriot Radio News Hour. I'm Joe Jaquin, CEO of the Patriot Trading Group. Happy Tuesday to all of you. Our toll-free number, 800-951-0592. The website at allamericangold.com. There's just so much to do out there. There's so many activities you can do just on our website. You can order online. You never have to speak to a human being again. I mean, think about that. We don't like it. It's fine. But we also like it the old-fashioned way. We love it when you guys call us and let us know what's going on. That's what the 800 number is. You know, we do it the old-fashioned way. We do it the new way. We've got Facebook. We've got Twitter. We've got YouTube. We've got podcasts. We've got videos, we've got articles. Listen, it's all to try to educate. It's what separates us really from everybody else. Not only do you get great customer service, you always get your product. You know, those things are kind of important. And then the information. Knowledge is power. And today is one of those. We got a great show lined up for you. I'm so excited. Gold's up again today as the dollar rally appears to be fading. Gold's up another 10. Silver back above 17. Matter of fact, 17 and a quarter. As everybody's getting ready for the earnings season. And I'll just remind you, because I know they don't like to do that. Remember last earnings season, and they're like, we've got double-digit growth. And, of course, I said, well, yeah, that's all because of the oil thing. And now the growth estimates for this quarter, earnings growth anyway, 4%. But it's how they get there, right? It'd be great if it was a true 4%. We're going to have a clip today from Dick Beauvais. And Dick Beauvais is one of those idiot box miracle guys. And he is the go-to guy when it comes to banks. And he was on CNBC this morning, and I don't, without giving too much away, I want you to just be prepared for what he has to say, because it's what I've been saying all along. And without the banks growing and all of these things, it's really hard to understand why it is and what the markets are doing and not doing. We have an update. Remember last month, the cat got out of the bag about what New York and, of course, what they were doing with foreclosures. We've got an update on that, so stay tuned for that. Just a little teaser. Foreclosures in the state of New York, they're up a little bit. I'm not going to give you the number, but it was a little bit. Maybe it was a little more than a little bit. If you go out to All American Gold today, we've got another article from Lombardi, who does the silver guy. He is probably the main silver guy out there, talking about supply, demand, and pricing. So if you're a silver guy, you want to go out and look into that. We have an update from the state of Illinois. And just how much trouble are we really in? And think about all of the things that are going on in the world today, the fires in California. So one of my best friends in the world he doesn't live in Napa, but near Napa, very close to it. And he says they can see the flames from their house. That's how close they are. I mean, it's like Armageddon out there. There's the one in Napa. There's another one in Anaheim. Just burning down complete subdivisions. There was an earthquake in San Jose. You start thinking about some of the. Puerto Rico is gone, right? They still don't have power in Puerto Rico. I forget, was it Barbados or whatever? One of those islands became uninhabitable with these hurricanes, and it's starting to get creepy. And then of course, I don't know if you saw. The Secretary of State apparently referred to the president as a moron. And let's face it, he's done some things that could be classified in that category, but the president fired off today, and I will say this: you got to love it. You got to be Donald Trump's Twitter is like must see Twitty, right? You just got to see it, right? You're one of the. It's like I always say to my friends, I don't like being in trouble, but I like being near it, right? Because I like to watch it. It's like, why do you watch NASCAR, right? You watch it for the crashes, right? Same thing here. Said that he challenged the Secretary of State today to an IQ test. I'd love to see it. Right? Have you ever taken one of those, by the way? I mean, you can do them online. They're pretty. There's a bunch of them that are free, and pretty interesting. Pretty interesting. I've taken them. I can confirm that I am not a moron, but I'm also no genius. So there you go. I'm pretty. Well, when you get right down to it, I'm pretty average. Just ask my wife. 800-951-0592. That is the toll-free number. The Dow is up today. Not a lot, but it is up. I wanted to let you know it's Wall-mart driven. The big news, $20 billion in stock buybacks. And I just point that out because as we're getting ready to give all these corporations big tax cuts, I can guarantee you what it is they're going to do with it. Today, Walmart, they didn't pay their employees more. They didn't pony up for their hourly work. They are going to, let's give Walmart credit. Out of the kindness of their heart, they're going to let their part-time employees work more hours over the holiday. Just announced they're going to buy $20 billion more in their stock. I'll tell you what they're not doing when we return. $800-951-0592. How you doing? Patriot Radio News Hour. If you're looking for those pictures from the Freedom Summit, right out on our website, just go out to allamericangold.com. The very first thing, you see the big poster there of the Freedom Summit, and just click on that. It'll take you to our Facebook page where you can find the pictures that you were in and print them out or save them or whatever it is. I'm not really sure. I'm not that technical, but they're there. Thank you very much for all of you that came out. As a matter of fact, today we're going to pull the winner. There was a big poster that they were giving away at the Freedom Summit, so somebody's going to be getting a call today. And congratulations. I don't know who it is yet, but anyway, just wanted to throw that out there. Metals plan. Wendy's a stud. We're actually a little ahead of schedule, so we should be definitely before Friday. We'll pretty much be done. There may be a few stragglers that go into next week, but we're making good progress on that, which means all of you else that have been waiting for orders, we should be able to catch up on that too. So I would say by Monday or Tuesday of next week, everybody that's waiting for product, it will be there. And again, thank you so much. If you don't know what I'm talking about in the metals program, man, get on it. What a program it is, especially if, we talk about gold, and, right now gold's, it's $1,291. That's a lot of money. You talk about a $20 Liberty or St. Gaudens at $1,325, and let me tell you, that is a fantastic price. You think about already gold jumped over $1,300. I know it came down, right? Listen, that was all made for TV. We understand it. We don't like it, right? But the Fed was doing the whole little balance sheet thing, and they had to make it look like a big deal, right? Oh, yeah, this is good. See, we're making progress. And they got to put their little spin on it, and they sell gold, and they, all these guys, oh, yeah, see, gold, it's not what it is, and, the paper guys. But then once you get through that and you go back to reality again, and reality slaps them all in the face, gold's not going anywhere. And you think about this year especially, and I spent a lot of time talking to Eric because I didn't work here in 01. And, after Y2K, And then 2001, it was kind of the and Eric will say this was the worst year he ever had. Right? And I think he's told that story, hey, when 9/11, when the towers came down, he was getting ready to go to real estate school. And it turned out to be the best buying opportunity, probably bar none, in the whole millennial. And this is shaping up. This is another one. This is it, right? When you go back and you look at, none of it makes sense, right? Stocks at all-time highs with record high valuations. There's no volatility and all of these things that don't happen very often. And, of course, there's no bubble, and they tell you all the reasons why. It's just nonsense. And today, we got a little clarity from a guy who normally is a homer. And what I mean by that is I've listened to Dick Beauvais for 14 years because he's been on the Idiot Box that long. He's actually one of the older guys. So I got respect for him because he's been around. And they were talking about the banks because that's what he does. And what type of position are they in? And this is going to be indicative of what we have to look forward to as far as the rest of 2017, 2018, 2019, 2020. When you look at, I've been making the argument that they didn't fix anything, right? That's the argument that I've made. I said that they covered it up, right? They wet the bed, and they put a bunch of newspapers over it and pretended like they fixed it. Today, Dick Beauvais came out talking about the banks, and I want you to pay attention, particularly what he had to say about what the real earnings look like and how far back he goes, because I think it really is. It brings home my point, and I think sometimes it's better to you when you hear it from somebody else. Ramon, let's play Dick Beauvais.
Welcome to Trading Nation, folks. I'm Eric Chemi. Today we're joined by legendary bank analyst Dick Beauvais. He's here to talk to us about the upcoming bank earnings this week. Now, Dick, I want to get right into it. Are these bank stocks moving higher because of momentum or because of fundamentals?
Oh, I think it's very definitely momentum because the fundamentals are not that strong. In other words, if you go through the different products that the banks sell, just about every one of them are flat to lower in growth than they've been for at least a couple of years. So it's not fundamentals which are driving these stocks at the moment.
So do you think it's just a matter of when these things come crashing down, if it's going to be momentum, but it doesn't have the fundamentals to back it up?
Well, if we don't get some event in the economy or in politics or somewhere that is going to create more loan volume and better margins for the banks, then yes, they will come crashing down. And I think that the risk in these stocks is very high at the present time, but I think you just have to go with the flow at the moment.
Okay, so let's focus more specifically on earnings this week. Is there a company or two that sticks out to you in terms of this is a company that I think is going to overperform or underperform, just something on the extremes?
Well, I don't think that any of the biggest banks are going to overperform. I think there are companies like PNC Financial that should have, relatively strong earnings. In fact, very strong earnings. I think First Republic, which is another regional bank, should do really well. But if you're looking at the stocks that people usually look at, Bank of America, Citigroup, Wells Fargo, J.P. Morgan, I don't think any of those companies are going to surprise you with very strong earnings right here.
You've got a sell rating on Wells Fargo. Do you think they've got any chance to do something to change your mind, to maybe get them back to a neutral or a buy?
Well, I mean, what generally I look at is what are you selling? In other words, even though it's a bank and people don't like to think about do they sell their products or not, I think it is still a key to the company. And at the moment, this company has now gone something like 7 years without showing any improvement in their operating profit. In other words, they've reduced their loan loss reserves by $20 billion, and that's caused their reported earnings to be up. But if you look at their operating earnings, they're down. They're down from where they were 7 years ago. And the reason is because they're just not selling things at higher margins. And that's what they have to do to get the stock, in my view, to turn around.
What about your thoughts on Goldman Sachs? I don't get the sense you love them either.
No, unfortunately, I think that they missed the boat totally in terms of the changes that have occurred in the, if you will, trading area. In other words, we've seen this massive shift in which money is pouring out of actively managed funds. In the last 12 months, something like $300 billion has been pulled out of actively managed funds, and that money has gone into, passive funds and into ETFs. In fact, $400 billion went into passive funds and ETFs. Now, if Goldman had set its business to benefit from where the money was going, I don't think it would be in as much trouble earnings-wise as it is right now, but it didn't do that. It waited for the old-time religion, the actively managed funds to come back, and they haven't come back. So Goldman has not repositioned itself the way it should have, and it is the worst performing of the 6 big banks in the United States. It is earning less money now than it did 10 years ago. I just don't understand the mystique of Goldman. I wouldn't own it.
So then let's just talk briefly about this OneMain financial sell. I mean, I get the sense that maybe it's not a good thing. Usually you think about M&A as a good thing for the market. This one may not be good because they might not have performing loans right now. Does that suggest to you that subprime, as it might affect some of the bigger banks, could also be a negative sign for them too?
Yeah, absolutely true. I mean, you're right on target, right? In other words, OneMain is selling, in my view, because there's been an erosion in the loan quality in the subprime markets. And even though the big banks claim that they don't do subprime anymore, they do. And the way they do it is they've backed into it by providing funding for companies like the Lending Club or On Deck Capital. And as a result of that, they're one step away from direct impact in the subprime market, but they're back in there. And I think that you'll see in certain consumer areas, such as credit cards and auto loans, you will see, an erosion in loan quality. And I think ultimately you're going to see an erosion in loan quality in commercial real estate also. So I think the outlook, again, from a fundamental standpoint, is not exciting, not positive, but the market doesn't care.
Dick Beauvais today, can you think about what he had to say, talking about loan quality? And really, did he miss anything? Right? Talked about auto loans, right? Commercial real estate, and talked about subprime again, and how these companies pretend that they're not doing it anymore. And then he just said, well, what they did is somebody created a company, and they funnel all the money through that company so they can say that they don't do it, but they really do. That at the end of the day, when you follow the money, it all ends up at the feet of these big banks. Then he talked about earnings, right, and talked about real earnings, right? All this the banks did, and here's what the Federal Reserve allowed them to do, is they took their loan loss provisions, right, and lowered them. How did they get to do that? Because the Federal Reserve bought them, right? They put a big blanket over it and said, hey, voila, presto, everything's good again. And that when you look at these banks and what they're really earning, they're making less money today than they were before the crisis hit. Things are actually worse. And this is the argument that I've been telling you, and it's something where when you think about what happens next, and you think about the rally, and he talked about fundamentals, and he said there's no fundamentals here. Talking about stock prices, there's no fundamentals, at least in his area, right? Talking about the banking stock. And then I told you about Wall-mart today. Walmart's going to take $20 billion and buy back their own stock. Listen, they can, right? It's their money. They can do as they see fit. Where did it come from? And here's where things got really interesting, because I started digging into it. The world's largest retailer continuing now to scale back on stores. Right? So here's what they're doing, because give you an example. In 2016, Wal-Mart opened 230 stores in the United States. And I was like, wow, that's a lot of stores. You know what they're going to do next year? 25. So, what does that really tell you? How good are things really? When Walmart, in the span of a couple of years, goes from opening 230 stores to 25. So what did they do with all the money they saved? Well, they bought back their own stock. And again, then I go back and you got to connect all these dots. Dick Beauvais warned, and it's funny, he's warning now. Right? Of course, I've been warning you for a year now that what's going to happen with the commercial real estate market. And today he's like, well, you know what, there's probably going to be some bad loans. In other words, what he was trying to say more simply is that the loan loss provisions from these mega banks are going to have to rise again. And then what you're left with is dealing with what are real earnings, and the real earnings just aren't very good. We're going to talk about the real estate market in the Empire State when we return.
This is the Phyllis Schlafly Report from Phyllis Schlafly Eagles. Mrs. Schlafly was a courageous and articulate voice for traditional values and common sense for more than 70 years. Now, from the Phyllis Schlafly Center Studios, here's Ryan Haidt.
In April 1990, the Berlin Wall was torn down, allowing East Germans to travel to their family, friends, and countrymen in the West for the first time since 1961. This wall, which served as the preeminent icon of communist oppression, was not strong enough to withstand the resistance of the oppressed people who longed for freedom. Phyllis Schlafly dedicated many long hours to the fight against communism, both abroad and right here in America. When the wall finally fell, she published a great I Told You So in her April 1990 Phyllis Schlafly report for the entire world to see that conservatives had it right when they said freedom will prevail against communist tyranny. She wanted to remind us of communist atrocities so we would never forget the threat that communist ideology poses to humankind. She recognized that the communist threat was far from over. Indeed, today's headlines prove that to be true. Although communists painted themselves as the inevitable wave of the future, Phyllis was proud to proclaim in the victorious year of 1990 that this communist myth was finally exposed for the lie it always was. It became obvious to all that communism and socialism are bankrupt. They have failed politically and economically. History is now clearly on the side of freedom from government, and the aging commissars of communism are falling into the dustbins of history. For the free people that will remain vigilant, the principles of communism and socialism stand no chance. Phyllis was wise to point out the rightness of conservatives on the communist threat, because the fight against communists is more than a so-called McCarthyistic witch hunt. It is a fight to protect the rights and lives of millions against an objectively evil force. If we are to stop the open call for socialism that has been manifesting in America, we must look to our history. From the failure of Chairman Mao's Great Leap Forward, to the victory of the United States in the space race, to the fall of the Berlin Wall, it is clear to see that history is on the side of freedom.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. In 2016, the conservative movement lost one of our strongest leaders, but Mrs. Schlafly's work and her voice continue through this radio program, our work in Washington, and the influence you have in your own community. Be part of that legacy at phyllisschlafly.com. We encourage you to bookmark phyllisschlafly.com and join us again for the Phyllis Schlafly Report.
Welcome back. Patriot Radio News Hour. $20 libs, $20 Saints, 13 and a quarter. And really, when you think about what gold's been doing, quietly, gold just not even 2 years ago, just at December of 2015, it was 1,050. 1291, 1292. Right? We've been as high as 1360 just this year. Well, just a couple weeks ago, and we're going back there, and much higher from there. And you know this. We all know it. That's not even really debatable. What is debatable is why you're not taking advantage. I have no idea. I mean, this is one of those no-brainers. Right? You're so close to spot, and then you start thinking about, just think about what Beauvais said. I mean, it's really simple. This isn't fundamental. I mean, if you think Wall Street's a good buy, then you know what? Hey, I got some great property up in Napa. Why would people live in California? Really, the traffic stinks. It's dirty. At least, you know, compared to Phoenix, I don't know, maybe it's clean to other places. It's dirty there. You get earthquakes, horrible wildfires, drought. I mean, you get it all. The cost of living's outrageous. I mean, the beach is nice, but most people don't really live near the beach because they can't afford to. Speaking of not being able to afford to live, a few weeks ago, remember we talked about how the state and we're using New York, and I'm sure it was in every state, because I've got a friend here in the real estate business who's telling me the exact same thing. A few weeks ago, we noted that New York's smart money, I don't know about, and let me, smart being in quotes there, at a variety of U.S. banking institutions, right, revert back to what Beauvais said, were tripping over each other to underwrite dividend recaps for owners of expensive commercial real estate projects, just as buyers for those properties had suddenly dried up. It wasn't suddenly. There are no buyers. But we're sure it was nothing, right? The 27-year-old analyst leading those bank deals, fully syndicated deals in which their respective employers will retain no risk, by the way. Probably just, more about the commercial real estate market than those who count themselves among the list of former prospective buyers, right? And here you are, we got the same thing, these kids with their MBAs and what have you. It does seem odd that the commercial real estate market in New York City is collapsing. At the same time, residential foreclosures are surging to levels not seen since 2009. Foreclosures across New York City surged 79% in the third quarter of this year. You didn't see that anywhere. It remains at the highest levels since the Great Recession. All 5 boroughs of New York City, that's Manhattan, the Bronx, Brooklyn, Queens, Staten Island, all posted increases year over year. Staten Island, the Bronx, and Brooklyn, where, the large majority, you kind of separate Manhattan, kind of the financial sector. The other 4 boroughs, that's where people live. The number skyrocketed 264% in Staten Island, 145% in the Bronx, and 118% in Brooklyn. And by the way, Queens, they were already the highest going in. They only chalked up about a 40% increase. Then when it goes on, it says a record high numbers of homes were scheduled for auction in Q3 of 2017, representing a 145% increase from just a year ago. And you start thinking about really what's happening, and right, they talk about all the puff and the make-believe and the unicorns and all of these value. Well, interest rates are low, so it's okay for these values to be where they are. No, it's not. You can't have your cake and eat it too, right? You can't have it both ways. We cannot have housing foreclosures rising again. Again, I'll go back to Bove. What did he say? They're rising again. Home loan defaults, auto loan defaults, commercial real estate defaults, you go credit card defaults, student loans. And student loans, by the way, non-payment of student loans rose to a new record. Well, they're all records. Who cares? And you're looking at numbers. I mean, this isn't a few. You're talking about hundreds of percent. And then you start thinking about how all of these things happen. Remember the last time. Oh, it was just a subprime crisis, and it was a little frothy, and it's contained. And then you went to all the boom states. You went to Florida, and you went to Arizona and California, and right, New York, right? And this is where they start, right? So it starts in places like New York. It starts in places like California or Arizona or Florida, Texas, and it spreads like a cancer. And then they try to tell us that they fixed it, and all these banks talk about how they're not in the subprime and they're not into these funny loans anymore. And then Dick Bove today said, well, you know what? Here's what they did. I'm not saying that the bank created them, but somebody created these companies. And all the banks give that company money to do all of these loans all over again. And at the end of the day, they're doing all of the same things. And again, and I'll say it again and again and again and again until you get it through your head. They didn't fix anything. They've actually made it more dangerous because the debt bubble's even bigger. That's why you got to get prepared. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. That is our toll-free number. And it's so simple. And that's the thing. It's not complicated. We tell the story all the time. When people buy gold, especially if you've never bought it before, you have this horrible misconception, right? That there's big gold bricks and all of these things. And $1 million, you know what? Probably, I've never tried it. I would love to see how much gold would fit into a shoebox. I know it's in the millions. My guess is you could probably fit 5, maybe 10. It could be even upwards of $20 million of gold in a shoebox. That's how portable it is. People think about, hey, I'm going to buy, $20,000 or $50,000 or $5,000 worth of gold. Have that in your pocket. I tell people all the time, they come in and they're buying $100,000 worth of gold, which is a lot. It's a lot of money. Absolutely it is. Your wife could walk around with that in her purse. No one would even know it. Now, $100,000 worth of silver, that's a different story. Right? You'd be dealing with about 420 pounds of silver, and it'd be, figure 10 shoe boxes stacked on top of one another tall. It weighed 420 pounds. But gold is so portable. You think about Puerto Rico. I brought that up, right? No one has power there. Generators is what it is that is making the world go round in Puerto Rico. You can't buy one. Right? They don't have cash available. If you had gold, I guarantee you the people that had some gold in Puerto Rico, they got a generator. You think I'm kidding? You all know it. Right? Then you think about all of the things that are really, really happening. Not the fake news, right? I want to believe, we all want to believe, watching Donald Trump's Twitter is great. It makes me laugh. Is that going to fix our problem? Absolutely not. And you think about Wall Street, right? And all this they do is they talk about interest rates being so low for the reason why things can be out of whack. That's not a reason. Interest rates are so low because it's broken, because they wet the bed and they covered it up with newspaper. And then got the average idiot out there to actually believe them. The great jobs miracle that they talk about ad infinitum. Again, this is the third straight year where job growth is less than the year before. Those are facts. They're not mine. That's the real data. And now we find out, guess what? Just like we thought, foreclosures are back again. They're back here in Arizona, too. Back with a vengeance. How about this out of Illinois? Illinois, we talk about, they're so broke. So they had an article where Illinois now, they don't even know how many unpaid bills that they have. At first, they said that they had $7.5 billion of unpaid bills. But then they went and dug around. Right? I guess, I don't know, they went through the piles on the comptroller's desk over at the state of Illinois and now say the unpaid bills is more than $16 billion. And then they said, but there's a problem. Because it actually may be a lot worse than that, because a lot of the agencies already know that the state is so far behind that they haven't even bothered to submit for payment. And that Illinois, the senators wanted to come up with a system. They wanted to say, hey, let's stop the guessing. And let's figure out exactly how much we owe. Okay, so that was the legislation. Essentially, hey, we want a spreadsheet from the comptroller of the state of Illinois that lists all the unpaid bills. All the ones that haven't been submitted yet, plus all the ones they already know about and how old they are and who they owe them to, an audit. The governor vetoed the bill, but he vetoed it for a reason that I had never heard of before. He said, well, I only vetoed it for one reason. He goes, we don't have the money to develop the system, right? They'd have to buy some software or hire some experts from IBM or whoever to come in there and be able to figure it out, right? They'd probably have to spend $200 million at least, right? You know how that works. Hey, we're so broke, we can't even afford to pay for that information. And then they said in the article, this was, by the way, I don't want to be out of Springfield itself. They say that their pensions are now $200 billion underfunded. And I want you to really, really think long and hard right now at $1,325 gold and why you wouldn't be buying it. Ask yourself, 10 years from today, the national debt's going to be what? Somewhere close to $40 trillion. Illinois, not the only, will probably have had at least 5, maybe 10 states file for bankruptcy. But don't worry, stocks will be at an all-time high. Patriot Radio News Hour, final segment coming up on a Tuesday. Final segment on this Tuesday. Fired up today. Listen, $1,325 gold it's like stealing. Quick look here at the markets. Gold's up $9 and change, $1,291. Silver's up 24 cents, $17.22. The Dow is up 45 points. Remember, that's Wall-mart. Wal-mart made a big announcement saying we're going to stop opening stores and we're going to buy back stock instead because that's how good the economy is. You know, maybe they'll start doing the Paradise Valley Mall and Casino, right? They'll make a big casino and they'll have like a tourist attraction in the mall, and they'll just take a part of the mall. It'll just be empty it's already empty, but now they'll charge you to walk around the empty mall. They'll have like instead of the train where they put the little kiddies on, right? They'll have a big boy train and all the adults, and you'll pay $20 to ride it, and they'll have a guy with a Bobby Brown headset on, and he'll be telling you about how back in the old days, Americans used to go to these places and buy stuff. But now, nobody has any money anymore, so they couldn't buy it anymore. So they all closed down. Maybe they'll turn them, who knows, right? We can make them huge homeless shelters and all of that stuff and just have a grand old time. And, you think about, and I go back to, when Eric was talking, when we talked about 9/11. Is it going to be North Korea this time? Because these things work that way. What I've been reading, and I don't know, I trust the Japanese. I don't know why, but they seem to have this right. The next launch from North Korea is going to be another one of those ICBMs where they goes way up into the atmosphere, right? It's got to go, 2,000 miles in the air or something to reach the U.S. But this time they're actually going to have a nuclear warhead on it and have it land somewhere in the ocean and blow up. I hope that's not true. Because at that point, then what do you do? 800-951-0592. That's why, you know what? It's a hedge. Just in case. Right? Just in case that happens. You're going to be glad that you had some. Just in case Dick Beauvais is right. And he says, hey, listen, none of these banks are in very good shape. Right? When's the last time you heard somebody say how bad Goldman Sachs is? And then remember what I've been telling you all along. They didn't fix anything. And now, 10 years later, all of the same problems are happening again. And again, they're trying to ignore it. It's just, it's just the bad balls that are empty, right? Yeah, okay. The problem is there's hundreds of thousands of bad balls, right? It would be fine, it's just the bad ones. Problem is the bad ones are about half the malls in the country. Right? Then you think about foreclosures in New York City. They're not up 5 or 10%. That'd be bad. Right? 20 to 30% could be trouble. Anywhere from 100 to 250%, depending on the borough. It's time to call Patriot. 800-951-0592. U.S. $20 libs and Saints at 13.25. Everybody take care. Enjoy the rest of your day. Seriously, it's a beautiful day out there. But before you enjoy it, make sure you call and get yourself some wealth insurance.